I spent time and money on books and videos trying to learn how to find and take high probability trades. It wasn't until I broke it down into two simple concepts that I started seeing positive results in my trading. In this video, I'll share the concepts that allowed me grow my small account to averaging $300 a day, along with live examples so that you can simplify your trading and start seeing positive results. If I understood these concepts I'm about to discuss in this video, I would have saved myself precious time and money. What are the challenges I faced though? Number one, I was trading setups without properly understanding how and why they work. Because if you just trade a setup without understanding the system, the rationale, how to work your way to trading maybe the 5-minute opening range breakout or the 15-minute opening range breakout, whatever it is you're trading, your results will be random because you will just trade it every time you see it set up, and you won't have a clear idea as to when not to take it or when to take it. Even if you're trading the previous day's low and high, break and retest, you would also struggle with the same thing if you do not understand the why and when to actually take that setup, the context behind it. The second thing I was struggling with was doing top-down analysis the wrong way. My goodness. I was going on the weekly time frame, marking out levels, and then I'll go down to the daily and then go down to the 4 hour and then the 1 hour. And by the time I was done doing all of this, I would have like 25 plus lines on my chart and I would be confused. Analysis paralysis. Okay, which line am I actually truly paying attention to? And it will be confusing and you feel like, oh, trading is just hard, like, and it's impossible. It's just that you don't understand the concepts the right way. So in this video, I'll be going over these two concepts and I'll be showing you an example so that you can understand everything and put it together. I also would link a live trading video where I traded this example I'm showing you in this video in real time and I made $360 on that trade. Now I'm going to go over two simple concepts. Concept number one feeds into concept number two, and then you're going to be able to put these two concepts together and take action and manage trades. And I'll show you an example on how to do this. What is concept number one? Think of it as location. You have different time frames when you open up the chart, but you can break it down into two so you understand, okay, you have the higher time frame, which is the big picture. And then you have the smaller time frame, which is mainly used for management to be able to see this big picture play out. An example I can think of to explain this is you have a group of friends and you all know you are going to a party. It doesn't matter how you all arrive there because there are different roads to arrive there. The big picture is that you are going to a party. Smaller time frames are the little roads and different roads that you can take to arrive there. All of this will make sense in a second. So when it comes to time frames, and you break it down into higher time frames and your smaller time frames. So if your daily time frame or your 4 hour time frame are considered your higher time frames, that's where you do your analysis, you draw your lines and you draw your trend lines, whatever. The smaller time frame then that would take you to the destination, your price target, should be your 1 hour or your 30-minute time frame. If your higher time frame is like your 1 hour time frame, the pathway that will take you to your destination that you analyzed on the 1 hour should be your 1 minute or 5 minute. That's where you would be executing your trades and managing your positions. Is trend still holding? Should I still hold? Should I cut the position? And if the 30-minute is your higher time frame, then use the 1 minute. Personally, how I've been able to do it is a little bit unique. I have information I get from the daily time frame. Very little information, just two things. And then my bread and butter time frame is the 1 hour time frame. And then I manage my positions using the 1 minute and the 5 minute time frame, depending on market conditions and context of what's going on in the market. Context is very important. Okay. Concept number two is level. Think of it as where is the pickup spot? Okay, I said earlier that I use the 1 day, the 1 hour, and the 1 minute or 5 minute. This is what I do. On the daily time frame, I only just mark out the previous day's high and previous day's low. That's it. And then I go down to the 1 hour time frame, and I get key levels. Key levels are price levels you probably hear me mention in my weekly outlook on my second channel, Divestments Unfiltered, where I go over the weekly outlook, what I'm expecting for the week, and then I update those in my free community as price changes or the charts evolves throughout the week. So I get my key levels from the 1 hour time frame, and then I get what I call reference points, like reasons for me to take the trade from my 1 minute and 5 minute time frame. Reference points. This is why people will probably wonder, okay, your reference points would always come from your smaller time frame where you're executing your trades. So when you hear me say opening print is my reference point, is if price is above the opening print, you buy. If it's below, it's most likely a sell bias. This is where I get it from. When I want to trade the 5 minute opening range breakout, I get that reference from the 5 minute time frame. I mark the high of the 5 minute candle and mark the low of the 5 minute opening range candle. So my reference points and my entry, exit, stop loss come from my smaller time frames. Now, this might sound like a lot, but in the example I'm going to go over it, and when it comes to action and manage, you would see how this is broken down step by step so that it makes sense for you and you can execute your trades. So make sure you watch the example, and if you want to see me execute this trade live, check the link in the description and watch that video once you're done with this video. Okay, so in this case, we have picked a strategy, and the first thing we want to do after that is go to the daily time frame, right? What are we looking for? What do we want to get from this location? What do we want to get from this time frame? We want to mark out our previous day's high and previous day's low. I've marked it out here in red and green. The high is in green and the low is in red. Once we do that, we want to then go down to the 1 hour time frame to mark the key levels where price will potentially gravitate to if we break the previous day's high or the previous day's low. You look left, where could price go to? Here, 133 is the next level price would probably gravitate to if it breaks above previous day's high. And where else could it go? Look left, 140.72. All right, if we break the previous day's low, where could we go to next? The next level here is around 116, and after 116, maybe 110.52. Now you can see that you don't have 50 lines on your chart. You just have four to six, and that's enough really, unless you're planning for the whole week. But on a daily basis, it doesn't need to be too crazy. So now move down to the 1 minute time frame. This is where I trade. This is where I manage my positions. This is where I get reference points, right? So I will be looking to mark out the opening print because it's a reference point I pay attention to. If price is above the opening print, then I would be looking for buys. If it's below the opening print, I would most likely be looking for sells, or I wouldn't touch that name if it has not triggered the level I am paying attention to. In this example here, the level I want to pay attention to is 133. Why? Because even if price breaks above this previous day's high, we have resistance close by, and that's a mistake some people used to make. You just take that break above that previous day's high, or maybe a retest, and you're hitting resistance right away and wondering, this trade did not work out well. I did not get my 1:2 risk to reward. Yes, it's because we had resistance right above. But the thing is, if this name is really strong and it opens and we can get above 133, guess what? There is room towards 140, and we can get a 1:2 risk to reward out of this trade. So let me just stop talking. I'm going to play out the trade. If you want to watch me trade this same setup live, I'm going to link it in the description below as well, so you can watch it after you're done watching this video. So now if you see this example, first 5 minute opening range formed and we broke above it with a strong strength candle. That shows me that yes, buyers are present and it is pretty strong. Like I said, the lower time frames, I use it for reference points. First reference point here that you can pay attention to is your opening print. Where is your opening print? Your opening print here lines up nicely with your previous day's high. I'm going to change that line to purple so that you can see it clearly. The opening print lines up with your previous day's high, and then you have your 5 minute opening range from here to this point, and we can see that price broke above the 5 minute opening range with a strong candle. Now, what would I be looking for? I will be looking for one of two things. I want to see price hold nicely above 133. And if I enter this trade, right, if price comes down, retest 133, I would look to take this trade, and my stop loss would be a break and candle closure below 133. Or if the 5-minute opening range high holds, you come back, retest it, and it holds, I would look to take the trade towards the upside as well. And my stop loss be 133. Why? Because it was a key level that broke. We got that level from a higher time frame, the 1 hour, and if it fails, it would not be a valid setup anymore. So let's just play it out and see what happens. And as usual, I said that I would show you a live video of me taking this trade. So now you enter this position, right? This is the right place to enter this position, and you can look for continuation towards the upside. Look for a 1:2 risk to reward, because your stop loss would be 1 at 133, right? Because that's the key level that it broke out from. Now you can see that you can target a 1:2. Even though we have more room to go, a 1:2 is enough. You call it piece of the move. And if you have a big position and you can allow runners, you take some profit and allow some of your shares or your contracts run to capture this full move, great. But let's play it out, and you will see that on this trade, it ended up working out nicely and paying out pretty good. So as you can see, it ended up working out nicely and paying out pretty good. What did I do? We started from the daily time frame. We got the previous day's high and previous day's low. We know that if price breaks above the previous day's high, there's a chance it will continue higher. But because we had our key levels from the 1 hour time frame, we now knew, okay, there's a resistance above. Let's probably see if price can get above that 133. That is probably the best place to look for trades, right? You waited for 133 to break. Things were like the different things supporting this trade idea. We were above the opening print. We were above the 5-minute opening range, 5-minute opening range high, and we were above our key level 133. All these things aligned for us to be able to take this trade, high probability, and we were able to capture this move to the upside. So if you don't do your analysis this way, there's a chance that you would just take trades blindly, and your results will most likely be random because you don't have enough reasons to be able to take this trade and say, this is why this setup worked and this is why it will work again, because these things repeat themselves. Price above the opening print, you just have to see it before you take a trade. Price above the key level you marked. Price holding the 5-minute opening range high, right? Because this was the high. We came back, although the candle closed below it, but you got this engulfing candle that closed nicely, so you can enter the trade and just keep holding it until your target is hit. Thank you so much for watching this video. I hope this example was clear and you're able to understand how to just look at charts and do your analysis, find your key levels, pick the spots where you'll be interested, use good reference points so that you can add more confluence and reasons for your trades to work out and increase the odds of you making profit. Thank you so much for watching. I will see you on the next video.